Hi everyone, it's Wednesday, December 11th. This is Liam McMahon with your daily moving average video. Thank you very much for watching. Hope you guys are all doing well today. So we had our first real data of the week this afternoon and evening. This afternoon, 3 o'clock Eastern, we had the RBNZ. Okay, they got together. Rate decision. They left rates unchanged, and their statement was contradictory. Okay, they said that they need to raise rates to contain inflation. Okay, again, RBNZ very concerned about the way that the housing sector is expanding. Okay, there's some serious concerns of a bubble going on there, more so than anywhere else. We're starting to see those same concerns develop in Australia, but New Zealand is definitely leading the charge. So they need to curtail inflation, which means higher rates. Fine, but then they also said that the exchange rate was too high, and that they need to lower the exchange rate. That's not, you can't do both. Okay, so they're not going to be able to raise rates and contain inflation, and also keep the Kiwi weak. At least not without doing some different things. Either active intervention, the forex markets are getting a break if the Fed taper boosts the dollar across the board. That could bail out the RBNZ a little bit. So it'll be very interesting to see. Frankly, I have not been impressed with Wheeler those last couple times out. They need to deal with this policy contradiction. They need to figure it out how they're going to do it, because right now it leaves them kind of paralyzed. They can't act to normalize monetary policy and combat the housing bubble without leading to spikes in the Kiwi, which would seriously impact the New Zealand economy. So that was our first piece of data. The second piece of data that we saw was Australian employment numbers. Good report from Australia. All right, the first good report, employment report that we've seen. I think it's the first in the last 6 months, at least the last 5 months. 20,000 new jobs created out of 10 expected. Unemployment rate ticked up to 5.8 as expected, so no real surprise there. And it actually showed better full-time job growth than we've seen lately as well. So all in all, solid initial Aussie reaction, pretty strongly bullish, and then it was immediately faded. So we're going to talk about what that means. But first, I'm going to make you read a risk disclaimer. So please pause the video, read the risk disclaimer, and then we'll begin. Okay, so I got some requests. I'm going to do 2 Aussie pairs very quickly, and then I'll go to the request. So here is Aussie dollar. All right, you can see this candle spike higher, fade lower, 90. All right, that's the major level. You can see that we've held that level pretty well, about 4 times now. So watch 90. A break below 90. This trend line is not attached to anything. I don't know why. Would seem to open up a move to 88.47, these previous lows. All right, so that's the level to keep an eye on Aussie dollar. And then the other one that I've just been watching is pound Aussie. Okay, we had a mean-spirited spike down here on pound Aussie, finish in a crazy bullish candle. We'll see now, looking for, as we're out of this triangle, looking for a move up to 182, these previous highs, and then higher up towards 183, maybe even 184. All right, so keep your eye on pound Aussie. Major support zone is if we retest 180.75, about 50 pips lower, or if we flag from here, that would be a nice opportunity as well. All right, let's go to the ones that I had requested. The first one, not my favorite pair, one of my least favorite pairs. This is US dollar Singapore dollar, so USD SGD. I had to do the analysis on this one. I didn't have anything drawn. It looks pretty bullish to me. Well, I should say right now it looks bullish. I see a clear bearish potential, but right now it looks bullish. So we had this descending trend line dating back from August that we broke out of. Okay, we had 3 very nice touches, then a breakout. We haven't retested it. We've kind of rolled far enough away that we may not even retest it. But if we do come back down, all right, it's going to be about this 124 figure. That would be a good buying area. Right now, I'm focused on this trend line right here. 1, 2, 3, 4, 5, 6, 7, 8, 9-ish. All right, it's not a perfect trend line. You see that we broke slightly below it. But generally, this trend line's held pretty well. We're back above it, and it looks like we're going to try to head up and test these highs. The way that this pair is structuring right now, it looks like an ascending triangle. A break of 125.71 would really seem to accelerate the upside, whereas a breakdown back below this triangle, below this trend line, call it 125, would signal a move down towards 124, and then maybe a bounce from there. All right, so as long as this trend line holds, I like it to the upside. I will really like it to the upside when we manage to clear this 125.70 or so, 125.75 level. That may open up 127, 127.50 here on Singapore dollar. Cable was another request that I got. Cable is interesting. I am hard-pressed to decide how I feel about cable right now, so that means I'm not trading it. Kind of a bearish two-candle reversal here. It's not that convincing of one to me. I know a lot of people have been talking about it in like evening star pattern. Yeah, I've seen better. I'm not overly blown away by it. This level is big. This is the 162.85 level. If we break below there, all right, and kind of give up these previous highs, okay, and these previous highs, basically this is a pretty similar level, that would get me a little bit more excited about the bearish potential on pound dollar. The other thing that I'm looking at here, one of my favorite potential setups, is if pound puts in a shallow head and shoulders here. All right, so maybe we see a little bit of a dip down to that 163 level. We form up a right shoulder, and then we break down. That's the 4-hour chart. The one thing I think that everyone should note here on pound dollar, all right, is well, first of all, these weekly candles are starting to get a little bit dicey. I'll give the bears that. It does look like, back-to-back dojis. It looks like maybe we're getting a little tired here. This is a pretty impressive run. But this is the weekly chart. The weekly chart's still bullish. All right, this is a bull flag. We broke the bull flag. This is a 600 pip run up, 700 pip run up. So we got some more upside to come. But we might take a break first. And you know what? That would actually be pretty terrific. We took a break down to about 161.50 and took off from there. I would love to start buying pound dollar down around 161.50. That's, about 200 pips lower. So, there could be a sizable move to the downside in between. But right now, the pair's bullish on the weekly chart and struggling on the 4-hour and daily, so I think there's a little bit, a wait-and-see approach would not be a bad idea. Another request that I got, Euro CZK, which is the Czech Koruna. I'm not 100% sure that this was actually a serious request, but it's an interesting chart because it lets me talk about some central bank stuff. This was the Czech central bank intervening. They printed a bunch of Czech currencies and bought a bunch of foreign currencies, especially the euro, driving their exchange rate lower in an attempt to boost their currency, a la the Bank of Japan. So this is what we got here. They set a peg roughly 27, a la the SMB. So that's what we're kicking around. I don't expect it to go anywhere from here. Certainly not going to find me shorting it, and you're not going to find me buying it either. So right now, to me, this pair is fairly untradeable because we have active central bank intervention and low liquidity. But it's an interesting pair to watch and think, man, I wish I was long this pair back down here. But I wasn't, so that's life. So that's the central bank intervention. You don't see them so much anymore, but there was one pretty nice example if you want to talk about it at a dinner party. Real quick, euro dollar potential double top, neckline is just below 102. Until then, play the range between 103.45 and 101.70, and not much you can do outside of that. Euro dollar trying to get low, can't quite do it below 138 yet, hasn't given up. Euro CAD rejection off of this double top potential, still needs some work to get lower as well. Dollar Swiss, okay, potential daily kind of maybe a reversal. I'm not quite ready to call it that, but we're working on it, trying to get out of this oversold territory. All right, 88.5 or so is support. We'll see if we manage to finally get some traction here on dollar Swiss longs above that mini trend line would really start to help. All right, so that's what I'm looking at here for the end of the week. Some good stuff. Real quick, I suppose I should just throw Kiwi dollar out there. Spike higher, all right, on a more hawkish than expected RBNZ. If risk appetite gives way, which there is a very clear setup for, which I don't have it drawn anymore because I goofed my charts. But basically, okay, broke that wedge. Watch the 50-day here, 1763 on E-minis. If risk appetite goes, Kiwi's going with it regardless of the RMB. So keep your eye on equities, keep your eye on the Aussie, and be careful, very careful with trading the Kiwi. All right, that's all. Good luck. Have a great rest of your week. I'll talk to you soon.